If you work for a fiat salary, you are a slave, because that money can be stolen back from you through devaluation of the currency. If you take that fiat and you put it into Bitcoin, you are free. If you look at stocks, up until the last couple of weeks, they were at all-time highs, right? Well, only if you price them in dollars. If you price them in gold, US stocks are the same price as 1996. What? It's because we've been devaluing the currency. So one Bitcoin is one Bitcoin. Bitcoin doesn't change. I can actually see a world where there is only one money, that is Bitcoin. Now that's a long way off, and the governments are going to fight like crazy to stop that, because government's power comes from these paper currencies backed by threat of violence. The reason price doesn't matter. What matters is owning a piece of the most valuable computing network the world has ever seen.
One of the most compelling aspects of Bitcoin is its consistency in value. Yusko emphasizes that just as an ounce of gold remains an ounce of gold, one Bitcoin is always one Bitcoin. While its price in fiat terms fluctuates, the underlying value remains constant. Over time, as fiat currencies continue to devalue, Bitcoin's purchasing power is poised to increase. This reality is especially relevant for individuals who earn and save in fiat currency. Yusko provocatively asserts that working for a fiat salary is akin to financial servitude. Governments can arbitrarily erode the value of wages through monetary debasement, effectively keeping workers trapped in a cycle of diminishing returns. However, by converting fiat earnings into Bitcoin, individuals can shield themselves from this wealth erosion and achieve true financial freedom.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Every day that I leave it in fiat, the government is taking a little bit of it away through this thing called inflation that they've told us for 100 years is good for us, which is not true. I mean, think about it. Over a 30-year period, I lose half my purchasing power at a 2% rate. How is that good for me? That's not good for me. And the issue of fiat versus gold versus, like, here's an interesting stat. So, gold today is like $2,900. Not that long ago, like less than 20 years ago, it was $200 an ounce. Well, what's the difference? It's still an ounce of gold. It's still a single ounce of gold. Well, it has the same purchasing power because the currency has been devalued, like that 100 trillion Zimbabwe dollar bill. So the same thing is true of Bitcoin. If I transition that savings from fiat to Bitcoin, now I'm in an asset that never changes. Like, a dollar is always a dollar, but it doesn't buy, quote unquote, a dollar's worth of goods because there's more dollars, right? So if you think in gold, an ounce of gold used to be $200, now is $2,900. It's not that the gold changed. 1 ounce is still 1 ounce. The money got worse. Like, according to Zillow, my house here in Chapel Hill went up 50% in the last 2 years. My house did not grow. It did not get more efficient. It actually wore out a little bit. I had to put some money into it to fix it. So no, the money got worse. And same thing true if you look at stocks. Up until the last couple of weeks, they were at all-time highs, right? Well, only if you priced them in dollars. If you price them in gold, US stocks are the same price as 1996. What? It's because we've been devaluing the currency. So one Bitcoin is one Bitcoin. Bitcoin doesn't change. If you work for a fiat wage, and this is a highly charged political word, you're a slave. Ooh, people don't like you to say that. No, not African Americans. You're just anyone. If you work for a fiat salary, you are a slave, because that money can be stolen back from you through devaluation of the currency. If you take that fiat and you put it into Bitcoin, you are free. Because now, every time they devalue the currency, your value goes up. It's pretty interesting. So what that does is it breaks the shackles of being a slave, and now you have more time to be creative, to be innovative. Now, you may choose to be a leisure person, that's fine, but it gives you the opportunity, if you so choose, to unleash human potential. And so I think the acceleration of great stuff because of Bitcoin and because of digital world is just going to be extraordinary. I can actually see a world where there is only one money, that is Bitcoin. Now that's a long way off, and the governments are going to fight like crazy to stop that, because government's power comes from these paper currencies backed by threat of violence. It's a pretty good deal for them and for the few politicians that make money off it, like you know from Zimbabwe. The politicians got super wealthy as they were devaluing that currency. Same thing in Argentina, same thing in Venezuela. The people at the tippy top of the pyramid make all the money in currency devaluations, which is why Bitcoin protects the rest of us from that kleptocracy. Every day between then and now, the price has been volatile. And yet, I don't think about the price at all, this is the long-winded way of saying the reason price doesn't matter. What matters is owning a piece of the most valuable computing network the world has ever seen. The Bitcoin blockchain, the network, all the tens of thousands of nodes that secure the network, is the most powerful computing network by 1,500 times, 1,500 times, not 1,500%, 1,500 times more computing power than the CERN supercomputer, which is pretty powerful.
Recent market volatility, including Bitcoin's dip from $103,000 to $83,000, is merely a reflection of short-term trading dynamics rather than a fundamental shift in value. Yusko attributes these price movements to institutional strategies involving Bitcoin futures. When Bitcoin was classified as a commodity rather than a security, it opened the door for large financial institutions to exert control over price movements through derivative contracts. Similar mechanisms have been used to suppress gold prices, allowing elites to profit while maintaining the illusion of stability in fiat currencies.
And that network has so much value, and we can determine the fair value of any network, whether it's Amazon, right, which is just a search engine to match buyers and sellers, or the Apple network of all the billions and billions of connected devices, or a television network. Networks are easy to value according to something called Metcalfe's law. And so we can come up with a fair value of Bitcoin today of somewhere around $95,000 per Bitcoin. Now, well, if the price is 83, then why isn't it 95? Well, again, people disagree about value. And in the last couple weeks, we went from, above fair value at 103 down to 83. Well, why? Well, a couple things happened. One, there was a big unwind of a arbitrage that's been going on since the advent of Bitcoin futures. Now, so this is a long, complicated thing, but everyone was cheering really loudly when Bitcoin was deemed not a security, right? And it was made a commodity. Oh, that's great, that's great. Well, be careful what you ask for. You might get it. Well, why is that bad? I will argue it was intentionally not classified as security, which would probably be better. It was classified a commodity because when you have a commodity, you can issue futures against that commodity, which allows very large, powerful institutions to basically control the price. Let's talk about gold, right? Gold prices, if you look at money supply relative to what gold should be, there are people like Chris Wood and others who say it should be $5,000, $6,000. Well, why is it only 3? Price of the commodity is up. Well, it's because of this thing called the roll yield. Well, think about this. Let's say the price difference between the future and the spot is 12%. I could sell the future. I could buy the spot or the ETF where the spot is, and I could make 12% with no risk. Seems like a good deal. And then if I levered that, if I'm a really big institution like a bank or a big asset manager, I could lever that up. So when the ETFs were approved, a little while ago, a year ago, everyone was cheering. Well, I was looking at the same day, not a coincidence, a whole bunch of futures contracts were also approved by the CME, Chicago Mercantile Exchange. Like, well, wait, what's going to happen is all these big guys are going to buy a bunch of the ETF, but they're going to short the future against it, and that's going to cap the price. This is exactly what happened. And then the price did start to rise as people got excited about the halving and because after the halving happens, the fair value rises because there are fewer block rewards. So people aren't going to sell unless they get a higher price. Long story short is what happened a couple weeks ago was that spread between the futures price and the spot price fell to 5 or 6%. Interest rates had gone from 0 to 5%. So now the cost of funding of that arbitrage trade, it's not worth it. So people unwound. And so there was a outflow from the ETFs and people freaked out. The bid-ask spread got super wide and the price fell. But that's a temporary phenomenon because I used to love, when the 13Fs would come out and people would say, hey, look, Millennium has this big position, $2 billion of Bitcoin. I'm like, no, they don't. Yes, they are long 2 billion, but they're short at least 2 billion, maybe a little more on the other side in the futures market. Now they've unwound that. So now it's more about traditional supply and demand dynamics. And my guess is we'll, resume the uptrend after we get through this trade war nonsense that we're going through today.
Yusko remains steadfast in his belief that Bitcoin's long-term value proposition remains intact. The recent unwinding of arbitrage trades and outflows from ETF have created short-term price pressure, but these are transient events. Ultimately, the fundamentals of Bitcoin remain stronger than ever. As traditional supply and demand dynamics reassert themselves, Bitcoin's price will continue to reflect its true value. The upcoming halving event, which reduces the rate at which new Bitcoin enters circulation, further strengthens its scarcity and should drive prices higher over time. Please like and subscribe.